I'm Natasha Chilingarian.
I'm Michael Ogden. This is Shared Accounts with CU Times. There is a story that has not been covered in the credit union space that I feel deserves its share of discussion. It is this. For the past handful of years, Natasha, we have been subjected to one of the most confusing organizational brand decisions in history. And I think everybody knows what I'm talking about now, right? HBO. Their
Right.
streaming brand went, this is such a dumb story. Their streaming brand went from HBO to HBO Go to HBO Now to HBO Max to Max.
Yeah.
And now 2 years later after Max, the company announced this week it's changing its name back to HBO Max.
Yeah, I saw that. What's up? What is with that?
It's so stupidly stupid because I always thought, as a former kind of marketer, whatever, why would you change the name of your service to remove your actual name of the company?
Yeah.
Like your
Yeah.
HBO, for God's sakes. Second, I have no idea, but I'm curious, how much did they spend on changing their name so many times? What would you guess? Just
I don't know about
it would
spend.
be
I don't know.
millions.
Millions, yeah. But you know what? I think they should have put that millions instead of doing that nonsense into improving the app because the app is horrible. If you try to use it, yeah.
Yeah, totally agree.
I mean, get your priorities straight here, people.
It was one of the dumbest things I saw all week, and just from a frustrating company that I pay every month, But I will say to end this kind of rant of mine before we get into it, Natasha. Third, what I'm really glad about is that I'm thrilled that I had this kind of news this week to distract me from the big issues going on. So for that
yes.
HBO, I thank you. Hey, everybody. Welcome to Shared Accounts with CU Times. Coming up, we are chatting with Matt Potere. He is the CEO of Happy Money, a lending fintech that partners with credit unions. You've heard of him. He's also a past CU Times contributor. We're going to be talking with him about lending strategies in our current wild economic environment. First up, let's do our thing and take a break from this week. Check in with Natasha. Hello, N.
Hello, M.
How has your week been?
It's been not bad. I mean, I can't complain. I'm done with moving, so
We're doing an unusual record on a Friday afternoon. We don't usually do that. So, usually it's a Monday to, whatever. But
it definitely feels like that. Yeah, it's one of those like, I'm just kind of trying to drag myself to the end of the week here. And then where I am, it's still Friday morning, unfortunately. So.
Oh, not here. No.
No.
What else was I going to ask you? I can't remember, you know what?
See?
But I am glad that we're doing it at this time. If it was like an hour later, I would be just drooling dumb.
Right.
I don't think I'd be able to talk.
We'd probably have a drink in your hand, too, if it was an hour later.
You know what? That's a really good idea. But no, I got to wait till after work.
Yep.
What have you been watching this past week?
So, well, as you know, I was moving, so that kind of put a damper in my TV and movie watching schedule. However, I did sneak in a movie this past weekend that I really enjoyed, and it was a recommendation from you. So I know we did speak about it briefly in a previous meeting we had maybe a week or two ago. But yeah, this is the first time talking about it with you here on the pod. Wanted to get into it more. The name of it is Companion. Also, speaking of HBO Go, Max, whatever the hell it is now. I don't know. Sure. It was on that platform.
What'd you think of the movie?
I enjoyed it. I really enjoyed it. And I saw, because you had rated it on Letterboxd and you gave it 5 stars, I think. You gave it the highest rating, which was like, whoa, that's rare.
Can I tell you why?
Yeah, why?
I have to interrupt here just for a second. Producer Zach, you're there, right?
I'm here.
Okay. Zach, you have not seen this movie?
I have not, but
okay.
The suggestions to watch it from you and Natasha have been forceful.
Okay. So I just want to make sure, because I will then make sure we do not spoil anything. So yeah, do go watch it and don't research it. Just press play. Natasha, I gave it 5 stars because, and it's rare that I give anything 5 stars. I had such a good time watching it. I was so surprised in a great way.
Yeah, well, that's what you want from a movie, like the experience.
Yeah.
And it didn't have any. So yeah, what I could say about it without giving away even the premise is it like kept surprising you all the way to like the very end. It wasn't like, oh, it's dragging, losing
Right.
steam here. It kept going, and it was just like, oh, okay, and I liked how it was. So it's like a science fiction, but it's also kind of a horror. Got some blood. It's bloody stuff in there, but it's also hilarious at the same time. So
it absolutely is.
Yeah,
because Zach Quaid's in it, and he's good. I always forget her name. Oh yeah, Sophie Thatcher.
That's the lead? Okay.
Yeah, Sophie Thatcher.
When I saw like a still picture, I thought it was Aubrey Plaza for a minute. They look a little bit
I can see that.
Yeah. So, but it's not her. So this other guy that's in it, I don't know, maybe you know his name, Michael, but he was perfect for this particular character. He was in I think the first season of The White Lotus, and then he was also in one of the seasons of You. On Netflix. And I recognized him right away. And he's perfect for this like particular
Lucas Gage.
Blonde guy.
Yeah,
okay.
Lucas Gage.
Been around lately.
I forgot he was in White Lotus.
Yeah. I think it was the first season, yeah.
I forgot all about that. But Sophie Thatcher, a lot of people will know if you've seen the show Yellow Jackets, and she's tremendous in that show.
Okay.
As well. She and Jack Quaid are just so great in this movie.
Yes. So anyway, Companion, go watch it. Don't read anything about it. Just go in. Just press play.
What did you give it? I forgot.
I think I gave it 4.
Okay.
Because I don't know. I kind of reserved the 5 for like just something that just was like, wow, like just a lifetime favorite or something. I guess I reserved that for.
To me, it was just. I understand the way of thinking. To me, it's just it was the most fun I've had watching a movie this year. Honestly.
And it was rare because it's a newer one. It came out last year, I think. And there's so few. I cannot remember the last time I saw a movie that was very recent that I actually thought was that good.
100%. That's why I was so excited.
Okay, yeah. All
That's
right.
great.
Anything else you want to bring up that you watched, or has that kind of been taken out of
just very quickly, another one that is so good. It's on Netflix right now. I watched it. It's the Conan O'Brien's acceptance of the Mark Twain Prize. It's on Netflix. That show is 90 solid minutes of hilarious. Also, you might tear up a little bit on a couple of occasions. But it was so well done. Usually it's on like PBS. They usually do it, but Netflix did it this year. And it revolves all around the fact that President Trump gutted the board of the Kennedy Center. He's now head of it. It takes that on, and it's Conan O'Brien getting the award, and Will Ferrell, Adam Sandler, Sarah Silverman, a bunch of comedians, and it is so good and so funny.
So I watched most of it. I didn't get to the end because I think I was doing some housework or something, but I was cooking dinner last Sunday and I put it on. And it was good. And I mostly loved it just because I love Conan. I mean, Conan is like a legend. Yeah. And I just like memories of Conan back when he had it was the Late Show, right? Like back in the 2000s, and it was just a regular thing, and I just loved it so much. And his funniest bit that he would do, it was hysterical, was the made-for-TV movie. You know what I'm talking about? So he would say, it would be like, so this thing that's happening right now in politics is so big that they're going to make a made-for-TV movie about it. And we got an early look at the cast, and then it would just be making fun of what people looked like, saying like, Hillary Clinton will be played by Chucky. It was like, but it would be, it was mean, but it would be like a picture, an unflattering picture, and then it was like President Bush will be played by a deer in headlights, like just a picture of this deer with big. Oh my God, it was hilarious! It was a riot.
His shows were so out there, and I'm really thrilled. He's got a very successful podcast, obviously, and a podcast network now. But again, I highly recommend both the movie you saw, Companion, and then this show, Conan O'Brien, the Mark Twain Prize show on Netflix.
Yes, absolutely. All right.
Okay.
Sorry, I went on a tangent there about Conan. I could talk about that longer, but let's move on to our interview here. So, we had Matt Potere, great guest. We love Happy Money. We've, heard of them, and I know a few people that have worked for the company from the credit union industry, so very closely tied in with credit unions. A few highlights from the interview talked about the unfortunate, dire situation that a lot of Americans are facing with debt right now,
Yeah.
pointing out that Americans currently have over $1 trillion in credit card debt right now.
Barf. Yeah.
Very difficult, but his company is helping out with that, with, of course, with lots of backing from credit unions. He talks about how the fact that the composition of debt is shifting, it's shifting into more credit card debt as opposed to other kinds of debt. But the fact that that can present an opportunity for credit unions to grow, deepen member relationships, acquire new members. So he talks about that. Of course, we had a lot of fun at the end of the interview as well. He talks about his time growing up on Long Island, and this included a stint as a very young gas station attendant up in the Hamptons. So just imagine.
Uniform.
In full uniform, yeah. And
it's really funny.
My first thing that popped in my mind was, Hampton's gas station. Sounds like a very bougie gas station. I don't know. Maybe selling caviar out of a vending machine. I don't know. That's what went to my mind.
Sure.
I don't know. I like it.
Pretty sure that's not it, but yeah.
I know. I'm just kind of weird sometimes.
It's
so
funny.
Yes, great interview. We have all of that coming up next. Joining us in the virtual studio today is Matt Potere, CEO of the fintech Happy Money. He is calling in from Charlotte, North Carolina. Hey, Matt, welcome to Shared Accounts.
Hey, Natasha, thanks for having me.
Hey, Matt.
Thanks for joining us. Yeah, we're excited.
Hey, Matt, very quickly, how long have you been in Charlotte?
12 years.
Ooh.
Does my accent not sound like I'm a native Charlottean?
No.
Not at all.
Not exactly. Yeah.
I wouldn't have pegged that at all. That's why I asked. Okay, great.
Yeah.
Glad to have you.
Well, we have one of our reporters. One of our reporters is in Columbia, South Carolina, and that's one of the towns I lived in. I also did not have a Southern accent while living there, so I can relate a bit.
Sure.
All right, so Matt, let's get into it. So, this is our first time meeting you, so welcome. We'd like to just set the stage by getting a little bit of information about your background and how you arrived at Happy Money. So, just for all our listeners, so Matt, he's been the CEO of Happy Money since August 2024, I believe. Looks like, Matt, you previously spent a number of years working in lending at B of A, as well as a few other companies, including Sunlight Financial. So can you tell us, tell us first, what appealed to you about coming to Happy Money, and how did you arrive at Happy Money as the CEO? And then second part of that question, curious, what's different about the type of work you're doing now at Happy Money compared to some of your previous roles?
Yeah, well, Natasha, as you said, I've spent my whole career in consumer finance. And in my last role, I was the CEO of a solar finance business. We took it public. And then when we took it private in 2023, I spent some time thinking about, what I wanted to do next. And I really saw two big challenges, two big macro problems. One is depositories need high quality originations. People no longer go to the local bank branch to go get a loan. They go online. And that's really hard for depositories, especially credit unions, to be able to build that scale and be really good at digital origination. So that was one problem I wanted to help solve. The other is that consumers are drowning in credit card debt, and personal loans are a great way to help address that. I actually was doing personal loans way back in the early 2000s, so 20 plus years ago. So I've got some familiarity with it. But what really drew me to Happy Money is its mission and the culture and the people. Our mission is to empower people to achieve their goals with simple and transparent financial products. And I love the company. I love the culture. It just got me really excited about the opportunity, and it's been an incredible 9 months.
Now, we're going to get into the debt issue here in a couple of minutes, but I want to get into kind of turn the dial here and talk about credit unions a bit. But how many credit unions does Happy Money currently work with?
So we've got about a dozen credit union partnerships, and that includes 2 of the 10 largest credit unions in the country.
Okay. And second part of that question is, how focused is Happy Money on its credit union partnerships as opposed to maybe other lender partnerships?
Yeah, the credit union partnerships are really the cornerstone of our funding partnerships. We funded over $6 billion in loans through credit union partnerships to date. But we do also partner with other lending partners like banks and asset managers. And that really complements those credit union partnerships, because often the banks and the asset managers have a different risk appetite. They have different return expectations.
Okay.
And so having a broad suite of partners actually allows us to serve more consumers and more members, and allows the funding partnerships to work together to be able to, again, serve more people.
Yeah.
And Matt, before we get into the whole debt issue and kind of the economic landscape here, one more thing I wanted to touch on. Could you just give us sort of a brief overview of like how does Happy Money work, like your loan services that you offer, and then tell us how the credit union fits into that. So I believe one of your main products is the payoff loan for the consumer, where they kind of aggregate all their debt together. Is that correct?
That's exactly right. So the payoff loan is an unsecured personal loan, and it allows consumers to consolidate all of their credit card debt into a single payment. And so we provide the end-to-end solution for that. We directly market to consumers to help originate them. We underwrite and process those loans, and then we ultimately service them. And we do that on behalf of our lending partners, our credit union partnerships, so that we make all the investment in the scale, we make all the investment from a marketing standpoint, and our partners get access to an asset with a great risk-adjusted return, and they get access to new members as well.
Okay, great. So then what are like the steps for, like, if I'm a consumer and I want to get one of those payoff loans, what is it easy to do? Like, what are the steps you have to take?
Yeah, so we make it fully digital. So to my point earlier about, consumers no longer go into the local branch. They tend to be searching online, or they receive one of our direct mail pieces or one of our other marketing pieces. They go directly online and they apply, and they go from beginning to end. They get that done in minutes, and it's fully digital. So we make the process really simple and frictionless so that it's a great experience for the member. It helps make the process really efficient, and it really sets the stage well for that new member at the credit union.
You know what, Matt? I just had an idea, just kind of listening to you talking about direct mail and how you're marketing this stuff. We should legit do a full marketing episode on marketing lending products, how people are doing it. Because I haven't thought about direct mail in a long time. Interesting.
We would love to do that. So much is directly online, but direct mail is also an important channel. There are lots of ways to reach consumers.
All right. I'm writing this down as an idea down the road to revisit. Okay. That's just me thinking out loud, Matt. This is how I function. Okay. Now we're going to move on to the debt thing. You've already alluded to it, but let's talk about what you are seeing right now in terms of how badly American consumers are struggling with debt.
It's challenging. I mean, today consumers have over $18 trillion in debt, U.S. consumers. So it's
Yikes.
a big number. It's a really big number. And if you look at that 18, within that 18 trillion is over $1 trillion of credit card debt. And the average credit card rate, interest rate, or APR is 23 or 24%. It's a big burden on the U.S. household for sure.
So are you getting more inquiries about this from consumers?
There is significant demand for sure for consumers to consolidate their debt, save themselves some time, save themselves money as well. So yes, there's a tremendous amount of interest.
Right. Not what we want to hear, but probably what you're getting more business as a result. But it sounds like it's really, really difficult out there. But one thing you touched on just now is the composition of debt seems to be shifting. So there's a lot more credit card debt in particular. And as you mentioned, interest rates are remaining high. How is that kind of impacted like the lender, credit unions in particular, since that's our audience? And can you talk about that a little bit more, just the shifting composition of debt?
Yeah, I mean, there were a few things. So first, if you look at what consumers are telling you, the burden on them I think JD Power recently did a study. Over half of consumers are quoted as saying that they're very stressed regarding their finances. If you look at, actually, we're recording this on Friday the 16th. Consumer sentiment just came out today at its second lowest level on record. So there's a lot of concern from consumers about what the economic future looks like for them. And that's making them wanting to address their balance sheets and consolidate debt and bring down their monthly payments, pay down their debt, and save money on interest.
Can I ask just on that a little bit, do you feel like then with that consumer sentiment and the stuff you're dealing with right now, do you feel like there's a bit of a panic happening?
I don't know that I'd say panic, but it's definitely a cause for concern for consumers and something that they're focusing on. If you think about over the last few years, I mean, the inflation over the last few years, those payments needed to go somewhere. And so it's effectively inflated consumers' credit card balances. And here we are today in 2025, and those debts need to be paid down, and they need to be structured. And that's really what what the payoff loan is designed to do, to help customers now pay down these debts. From a credit union perspective, it provides a real opportunity. I mean, helping consumers and helping members achieve their goals and be there in the times that matter is how you build long-term loyalty. And there's a tremendous opportunity here. It also happens to be a really attractive asset for the credit union, for the balance sheet. But from a member perspective, it's an opportunity to deepen relationships and sort of at the perfect time.
And it sounds like you've already started hitting on this question that I have now, but are there some ways credit unions can better support members right now with those kind of options for responsible credit use, effective balance sheet management tools, any kind of education or help?
Certainly helping to provide them education and helping to provide them tools. But we really think making sure that you have financial products that can help the consumer achieve their goals, that sets you up for a great long-term relationship. Lots of credit unions are trying to grow their member base. And so, what better way than bringing members in when they have a real need and, helping to put them in a better financial position.
Well, Matt, you touched on this a bit about the concept of, incorporating trust in lending. And I think that's really important. And it's something that I think credit unions thrive on. And one thing is, credit unions really, a lot of times what they try to do is try to save people from going to like the payday lenders, and the kind of these predatory lending companies and be more trustworthy and transparent. Can you talk a little bit about why is transparency and trust in lending important? Like, especially now when people are experiencing all this debt? And are there some specific ways that credit unions can really display that trust with the consumer?
Yeah. So first and foremost, transparency and trust are important just because it's the right thing to do. Fundamentally, credit unions are made up of people. Consumers are by definition people. And Happy Money, it's the same thing. We're people trying to make a difference. And so it's fundamentally the right thing to do. But it's incredibly important to build trust. If you can build near-term trust, you can create long-term relationships, and to be transparent so that consumers know exactly what they're getting and when they're getting it. We sometimes talk about the Thanksgiving test, which is if you were sitting around the Thanksgiving Day table and you were looking across at your family members, would you be proud of the products that you're offering them, or would you have to apologize and explain it away? And you obviously want it to be the former. And if you can do that, you build a real relationship and you earn the right to earn more of their business over time. And so it's a privilege and an obligation.
That's a really fun analogy. I like the visualization
that is a
of
test.
that. Yeah. Like, oh, I'm so sorry about this potato casserole. I put it in the oven too long.
Yeah.
That's right.
But Matt, let's dig a little bit deeper into that question with this one. I'm curious about this, about how can discipline, flexibility, and add-on thoughtful risk management how can those things be leveraged to advance lending strategies, even in the face of economic and policy uncertainty that we're watching right now?
The key is having good, strong risk management and understanding that the economy goes through cycles. And so I shared, I have 30 years of my career I've spent in consumer finance. If you look at the rest of our executive team and our broader team, really deep credit experience, really deep risk management experience. We've been through multiple cycles, and that's really important because you want to be prepared. So as the economic environment changes, you've originated an asset with a good risk-adjusted return that will perform well through the cycle. And so it's important to stay grounded, leverage that experience. At Happy Money, we're very analytically driven. So we make fact-based decisions, we leverage the data, but we also leverage our experience.
Very good. Thanks.
Okay. Now, Matt, before we get to part 2 of the interview, one other topic I wanted to hit on, and this is Michael speaking to the topic you were really interested in earlier in the interview, which is marketing. So one thing I noticed, just what we've heard about Happy Money, we get, various press releases, and I was checking out the website. Looks like it's really known for its kind of fun, consumer-friendly branding and marketing. So I wanted to ask you about that a little bit. Like, how has that approach, do you think, benefited the company?
Yeah. So if you think about in your head, you think about, bank or depository or maybe even credit union. Sometimes you think of this stodgy old institution that's not very approachable and not very flexible. What we want is to open our arms up to consumers, to make them feel safe and comfortable and build trust and understand that they're dealing with people who genuinely have their best interest in mind. And so we built the brand to be really approachable. You can see that visually when you look at our website. But even more important than what you see in the brand is underneath, it's the culture of love, trust, and hustle. And they're not just words for us. They're things that they're core values that really matter. And so we try to reflect that in the brand, but it's who we are as a company.
And just a quick follow-up to that, how important do you think it is to continue investing in marketing, even during times of economic uncertainty? Because I know that's a lot of times marketing is kind of the first thing to be cut or go, when there's some, trying to cut costs or whatever.
Right.
How do you feel about that? Do you think it's really important to keep it going?
It is important to continue to invest and make sure that consumers know where they can go to meet their financial needs. And so those are definitely important investments. Will continue to make those investments through cycles.
Nice.
Okay. And again, I am making a note to do a marketing episode.
That sounds
and
good.
We're going to have you back. So, okay, Matt, we're going to move on to the second part of the interview, which is just about Matthew. Okay, Matt, what city, state, where did you grow up?
So I grew up in Bayport on Long Island in New York. And if you've ever heard of Blue Point oysters, or if you're spent any time in the Northeast and you've heard of Blue Point beer, I went to Bayport Blue Point High School. So that's effectively my hometown.
Was the beer your high school mascot?
I wish it was, but it came after I graduated high school. So I missed the window.
Oh, I bet secretly it was, under the bleachers.
Way too expensive for my taste.
Okay, let me ask, what do you think about your hometown now?
It's a great place. Really great suburban town on the South Shore of Long Island. I grew up only a couple of miles away from the Great South Bay.
Yeah.
It was a great place to grow up, and I was incredibly fortunate.
Okay, thanks.
All right. And I love it when we get a food recommendation and a drink recommendation.
Oh, yeah.
All at once.
In these podcasts. So I made a note of that if I'm ever there. Okay, next question, Matt. This is kind of a fun one. We ask a lot of our guests. What was your very first job? Like, not professional level, but just like after school summer job?
So my dad owned a gas station out in the Hamptons, which sounds ritzy, except for I was working and pumping gas. I didn't have any of the ritzy stuff. Actually, I started when I was 10 years old. I think it's far enough ago that I think statute of limitations have run out, so we don't have to worry about child labor law. I was cleaning windows and picking weeds at the gas station, then eventually pumping gas, which was just a good life lesson in how to interact with people and how to deal with customers and how to be responsible. And this was back when most people paid for their gas with cash.
Sure.
So you had to carry around a pocket full of bills and make sure you're making change the right way. And it was a formative experience. It was incredibly valuable.
In that kind of job, having to make change, back then, did you have to wear the little change belt?
Do you remember that? You remember the change belt?
I remember those things.
We didn't wear the change belt, but we used to. It was a Hess gas station, and if you've been to a Hess gas station, full white uniform, white pants, white top, and as I worked my way into 10 to through high school, wearing the Hess uniform wasn't exactly the most stylish uniform to be wearing around, but again, it was a character builder.
Hey, ladies. Yeah, for a visual, I think, and Matt, you might agree with this. I am envisioning Steve Martin's character, Nathan Johnson, working at the gas station in The Jerk.
Oh, wow. Yeah, it's not that far off.
Yeah, okay. That's what I'm picturing.
Okay.
Matt, where did you go to college?
I went to the University of Delaware, Fighting Blue Hens.
Fighting Blue Hens? I don't think I knew that.
Yeah, it's not the greatest mascot name, but it is the mascot.
Okay. What was your favorite class there?
Oh, wow. When I was a sophomore, I took a class on meteorology.
Oh.
That has absolutely nothing applicable to what I do today.
No.
But I really liked it. Even now, it's like random weird trivia. If the thunderstorm's blowing in, I'm like, oh, it's the wall cloud. And you can feel the cold winds come, or that's a cumulus cloud. So I don't know. It was kind of a fun class.
Oh no, there's old man Potere telling us about the weather again.
In the winter, people are telling me they're seeing hail. Like hail's a summer phenomenon. It's not a winter phenomenon. That's sleet. So these are I guess things that got stuck in my head.
Well, and I bet do you have a conversation about the difference between sleet and grapple?
Grapple. I don't think we got far enough to grapple.
Okay, sorry.
That was advanced. Yeah. There you go. Well, there you go. That in another life, maybe you were a meteorologist on one of those getting up on
Tell you what,
news.
I will come down there, bring a long chair, and we'll just have a full afternoon talking about weather terms.
I love it.
Okay, this sounds fun.
Okay. All right, Matt, next question. This is another classic question that we ask all our guests. Again, going back to your youth, what was the very first album you ever bought or remember listening to all the time?
I'm not sure. I'm sure it was on a cassette tape.
Okay.
But I'm not sure, but I will tell you my very first concert, which is very clear to me, was the Bon Jovi Slippery When Wet tour with Cinderella opening up for them.
Oh my God.
I think I was like 11 years old. Looking back on it, entirely inappropriate to bring an 11-year-old. My mom brought me. Entirely inappropriate for an 11-year-old to go to a Bon Jovi concert with Cinderella. But I think she was as surprised as I was that it was not appropriate for an 11-year-old. But anyway, that was my first concert. She's a great mom. I love you, Mom.
Yeah, no, God bless her. I think all parents should take children to really uncomfortable concerts.
Yeah.
Where did you see them?
Nassau Coliseum on Long Island. Yeah.
There you go. Cinderella. I think their big song back then was "Don't Know What You Got Till It's Gone."
Yeah, and Nobody's Fool.
Nobody's Fool.
Yeah.
God, what a dumb band. But Bon Jovi's fun.
This is back when you didn't hold your the light on your phone up and sway. You had a lighter. Like you had to burn your finger to show the band how much you cared.
Exactly.
Yeah. Oh, wow. Old school.
And if my sister was there, she was getting high. Anyway, let's see. Last question here, Matt. What was the last movie you watched?
The Usual Suspects.
Oh.
Rewatched it with my wife and my 16-year-old son. My daughter was off at college, so she wasn't home, but we watched it with my son.
And what did everybody think?
My son loved it. My wife loved it. I am a terrible movie watcher, and I always get distracted and bored and end up checking my email, and then I forget what happened, and I ask questions, and my wife gets annoyed. So everyone seemed to like it, but it had been a long time, so I kind of forgot some of the storyline and didn't pay enough attention this time through.
Yeah.
All right.
Short attention spans these days, it is tough. I agree. It is hard to just sit and watch. I know Michael would say something different. He's like a hardcore movie watcher, like as a hobby, but I always have a craft going in my hands while I'm watching or, looking at the phone. Yeah, it's tough, but okay. Well, that's a fun one.
It's a good call.
All right. Well, Matt Potere, CEO of Happy Money, thank you so much for joining us on the show today. This was a lot of fun.
Yeah, thanks for having me.
Thanks, Matt.
Thank you, Michael.
To all of our listeners, thank you for downloading today's show. Please subscribe to Shared Accounts with CU Times in all of the normal podcast places, and please share all of the episodes with everyone you know, all of your friends, online friends, real life friends. You know the drill.
Dogs, cats. Feel free to rate us too, 5 stars only. As always, thank you so much to our producer, Zach Nyheisel. Thanks, Zach. Join us again next week for a new episode of Shared Accounts with CU Times. Until then, thanks for listening.